Trish, I'm gonna turn it over to you.
All right. Well, thanks for having me here today, and nice to meet you all. Um, I will give just a bit of an update, sort of an overview of sort of our story, how we started Chenmark and kind of where we are today, and then I'll just kind of open it up for discussion because there's a lot of different ways we could go, and I'm kind of happy to talk about whatever the group wants to talk about. We'll keep this pretty informal. But basically, my name's Trish Higgins. I started Chenmark with my husband and brother-in-law we had the idea in 2014 and we launched in 2015. And so, that's a little bit of a weird group to start, something together. At the outset, there were certainly a lot of questions from other parties about it, and you know what? It just was something that felt like natural to us. We worked very well together. My husband and I had worked together before I went to business school, so we already had that experience. And my brother-in-law had lived with us like on and off for sort of random reasons for a while. So we were very close, and it was something that seemed like other people were much more concerned about than we were. So it kind of just worked out for us. And we all had more of a traditional finance background. So sort of different sectors of finance, actually none in investment banking or private equity, which would be like the most directly like relatable background to search funds. But James was a currency trader, Palmer was a equity research analyst, and I was a research analyst at a macro hedge fund. So all kind of random things. And I went to business school. I did not take any search fund classes at business school at all. It was not on my radar at all. And about a year after business school, I think I started, and all three of us in our own way started to have sort of a little bit of like I'd say like an early life crisis about, you go through business school, you go to college, you do your job, you go to business school, and then like a year out of business school, you're like, oh, is this like what I'm going to do for the rest of my life now? Because I looked around and was like, this is not what I want to do. And so we started sort of tossing around ideas for other things. We all had a little bit more of like an entrepreneurial bent. And the idea for Chenmark kind of came from two places. One, sort of on the serious side, was an investment side. We saw kind of what everybody sees in the search space is, hey, there are all these businesses out there that are, too small for traditional private equity to care about, too big to sell to your cousin or to really shut down, and not a lot of options for these owners. There are more now, but still not a ton of options. So you can generally buy them for attractive prices. And so that was kind of the investment side of things. And on the investment side of things, we, from the very beginning, said we want to own multiple companies. And so we're a little different from a traditional search fund, which honestly made things kind of harder in the early stages of what we were doing, because we knew that we wanted to build out a portfolio of these things. And especially at the time that we were told that was a bad idea. But it was like that was our vision and something we wanted to do. And so everything we've done has been sort of around that goal of owning multiple companies. And we wanted to be long-term owners. We wanted to buy companies we thought we could own for the long term, and not necessarily have high levels of growth, but just things that were steady cash flow producers. And so that was sort of the investment side of things, diversified portfolio, small, steady, cash flowing small businesses that we buy for attractive prices and hold for the long term. So that was our sort of business investment thesis in 2014. Is still basically exactly the same. And on the personal side of things, when we were starting, we all felt that we we spent a lot of time behind like a Bloomberg terminal and an Excel spreadsheets, and we all just felt like we wanted to do something a little bit different and have more of an impact and kind of get our hands dirty. Like we kind of had this feeling like we weren't doing anything. And so we really wanted to get out and sort of see if the things that we had learned in, going to good schools and working in more like finance realm, see if any of those ideas that we had like actually worked in the real world. And that's certainly where we live now. And some of them do work and some of them do not work at all. So we started off, different for us. We all were working while we started our search. But I sort of like to say that like three people working on this as their side hustle is probably worth maybe like one full-time searcher. And as it became more of a real idea, we ended up sort of slowly rolling off of our paying jobs and officially doing the search. And so I quit my job in June of 2015. And we bought our first company in September of 2015. And it was at that time where we said, okay, even if we had this deal we were working on, we said, even if this deal doesn't happen, we are definitely doing this and pursuing it. So it took a little while for us to kind of make the full commitment to actually doing this. And so the first business we bought was a commercial landscaping and snow removal firm up in Portland, Maine, which is where we're still based out of today. And we, that was really where we, got a lot of hands-on operational experience. It's a very, blue collar industry. You're doing real work every day. The company we bought definitely needed, I'd say, some upgrades in their processes, to put it politely. And so, we really had, our work cut out for us. And the goal of Chenmark has always been to use the cash flows from the businesses to fund the equity checks for the next business. And so we're really sort of as good or as bad as our businesses are performing. So we don't really have any external investors. We have one small external investor we took on a couple of years ago, more because we realized, especially on the HR side of things, we made a couple of like big mistakes early on and realized that maybe somebody who actually had experience managing people would be a helpful person to have on our side, since we didn't know what we were doing. But other than that, we are, a couple of years in, we converted to a C Corp structure. So all of our companies are 100% owned by us, and we use our cash flows to fund our growth. So we're sort of have, I think, created our own model that I think reflects what our goals are, which are to, own these businesses for the long term, and sort of invest sort of back into ourselves, into our company. And so our structure, I think, works for what we're trying to do. And so fast forward to today, we have 9 businesses, sort of what we call platform businesses. So each of those have their own CEOs. I'm actually CEO of one of those businesses, and have been for the last couple of years. So I kind of wear 2 hats, like one on the sort of Chenmark HQ side, and then one just as the CEO of it's a tourism business. So that's been interesting during COVID. So a couple of our companies have had sort of the ability to grow through acquisition. So some of them have done a fair number of like small tuck-in acquisitions and have kind of grown that way. Others of our business have, they're just sort of steady growth type businesses that, acquisitions don't really work. So we're basically at a stage now where we're doing, aiming to do a couple acquisitions a year. And we are, I think the big thing for us is we realized pretty early on that the most important thing in these small businesses and for our model to work is the quality of and trustworthiness of the person that's running the business and is in that CEO seat. We run a pretty decentralized program when somebody is one of our CEOs. They have some financial reporting requirements and things of that nature, but they're making all the day-to-day decisions. And so to have a person in that seat, we really have to trust them, and trust that they understand both, that to run the company in a long-term sustainable way, sort of financially, but also kind of culturally. And so make sure that people are on the same page as we are and understand what we're kind of trying to do. So about 2 years ago now, we started our own kind of like internal like CEO and leadership development training program, which has been really great for us because it's allowed us to grow. The reason that I'm CEO of one of the businesses now is that in 2019, I was leading search for us, and there were all these interesting companies that came our way, and we were like, this is really interesting, but we have nobody to run them. And so we felt that our lack of internal sort of talent pipeline was really hampering our growth capabilities. And so this one company came along, it's semi-local to us, and I was like, I think this would be a great company for us to own. So, since we don't have anybody else, like I will run it, and then like we'll figure out another person to run it at some other point in time. And obviously between James Palmer and I, like that's not a sustainable strategy just to have all three of us run the businesses all the time. And so after that, we said, okay, we need to kind of bring our own, sort of have our own recruiting process, bring people in. And so far we have 9 people who are kind of in the program. And right now, 4 of them are our CEOs. So, and it's been working out really well. So we're excited about that. And it really just kind of goes to show, I think, bringing a person into a smaller business that has a retiring owner can make a huge difference if you got to kind of get it right. And it can also go really, really badly if you pick the wrong person, which we've had experience with both of those things. And so, yeah, that's, I'll sort of stop there. That's the overview of where we are today, kind of the big things that are on our that we're kind of working on. I think I jotted down a couple notes before the session just about like the big picture things that we've learned so far. And I think the 3 things that I'd say we have learned so far is, one, we could spend pretty much, I see this a lot in the deal process with searchers, as well as in sort of operational setting as well, is that for us, it has really paid to have a bias for sort of taking action over sort of like being overly theoretical about things. So for us, we've really benefited from saying, okay, even the first deal we did, it wasn't the perfect deal by any stretch of the imagination, but we had momentum by doing it and learning and improving that business and going forward from there. Same thing in an operational setting. We want to have the framework kind of set up, but then we have a strong bias to just like, okay, well, we don't have all the information, but this is the best we can do. Let's try this. Maybe if it works, that's great. If it doesn't, then we'll change and kind of continuously iterate from there. And certainly have noticed and observed a lot of people sort of having like analysis paralysis and sort of being overly theoretical about things. And I think in a small business setting, being willing just to kind of like make a decision, move forward and adjust if needed is a really valuable skill, and it's been very, very important for us. And I think that we have found that sometimes like there's a strong correlation between like how good of a school you went to and like your desire to like analyze and have everything be like perfect. And that can really sometimes like hamper like progress. And it's something that we ourselves have had to kind of like overcome when we're in this space. So I think for me, that's been one of the biggest learnings we've had so far, particularly in the acquisition space. I've got 3 of these, so just bear with me. The second one is that we've been really I think we have tried very hard to be authentic in our approach. And so we don't like apologize for our past or who we were or anything, but we also are sort of like, this is who I am, today when I talk with sellers. And I think that we have been able to get traction with sellers by, it is like a weird thing to say, but like by being like a normal person. And we've had a lot of people say, I really enjoyed talking to you because like you just spoke like a normal person. Like you didn't like come at me with like all sorts of financial terms. You didn't like throw around like your fancy resume. You didn't like kind of come in and try to intimidate me or whatever. Like we really try our best to show up and engage with both own potential sellers, but as well as operationally employees, vendors, or whatever, just as a like, this is who I am. Like I have 2 kids, I drive a mom vehicle, this is what I do. And like and I just try to be I don't try to be overly I'd say almost like professional. I try to just be like authentic to who I am. And I think that's worked really well for us in terms of having people in our space feel more comfortable working with us than they might if we sort of like, walked around wearing suits and being, sort of feeling like acting like we're fancy or like better than or any of that sort of stuff. And so that's been really important for us. And then the third thing I think is having the ability to be somewhat patient, which is probably an annoying thing to say to people who are in their search. But the ability to be patient with both M&A and know that somebody you talk to today could come back in 6 to 12 months because they're ready. And so to take the time to sort of make sure you thank everyone for your interactions and to let them know if you change your mind, come talk to me, and those things. I think we found that being sort of a bit longer term minded and sort of patient with sort of working both people who might want to sell their business as well as internally when it comes to sort of thinking about operational change, to know that like even if today the answer it doesn't seem like it's going well, to be able to have like the sort of the grace to look through that moment and keep that relationship open so that it might come back around. So we don't really approach search as a highly like transactional thing where like either it's yes or no, and if it's no, you're dead to me. It's we tend to approach it with much more of a sort of relationship building sort of approach. And when that happens, we found that generally speaking, like it kind of comes back around to us. So those are big things: action over theory, being authentic in your approach, and having a little bit of patience. Those are kind of, if someone were to ask me today, like, what are the big things you've learned since being like a Wall Street analyst? Like those are the big things that I think have worked really well for us. So anyways, I will pause there and see if anybody has questions on what they like, areas they want to dive into.
Yeah, I can start. I have a couple of questions, but I'll just start with one of them. So when you first started, it sounds like you started kind of raising acquisition by acquisition. Are you planning to raise like a committed capital fund, or are you planning to continue doing acquisition by acquisition? And what sorts of investors have you been approaching as well?
So we raised some friends and family capital for our first acquisition, and then mostly used debt and some rollover equity to get that done. We raised a little bit of the same for the second, but since then we have used the cash flows from the businesses to purchase additional businesses. So we have not taken on any additional investors. And I'd say that a couple of years ago, we talked a lot about raising a fund of committed capital to fund acquisitions and things like that. And the pro to that is that one, you've got money. It's nice to have money. And two, you can go faster, and you could maybe buy some. Maybe you could. I mean, I don't know if it's a good thing. You might stretch valuation a little bit. You might be able to go for something a little bigger. Those sorts of things. But basically, you can move faster. And I actually think that for us, back in, I'd say, I don't know, 2017, 2018, we actually did talk to some investors about raising capital, and those conversations really didn't go anywhere. At the time, it was, we wanted it to be a holding company. We wanted to own multiple businesses, and we wanted to have basically like an indefinite time horizon. And at the time, at least the people we were talking with had like zero interest in doing that. I think that today it's different. I think that today there actually is like a pool of capital that is open to funding those sorts of things. But at least like 5+ years ago, when we were looking at it, like it just wasn't something that people were interested in talking about. Plus the fact that we were like this weird family group, like that also was like, I feel like for investors could be like a quote unquote red flag. And so, it kind of just didn't go anywhere, at least because we weren't willing to compromise on any of the things that we like felt strongly about. I think if we had said, okay, well, it'll be, maybe a 5-year thing, or it won't be a holding company or something, maybe we would have been able to get somewhere. But because we weren't willing to compromise, which isn't the right or the wrong thing, it's just how we felt. None of those conversations really went anywhere. And we said, okay, we're basically just going to go it alone if we want to do this. And by doing that, I think that it's ended up being a good thing for us, because we've had the time to build out, I think, a little bit of like what makes Chenmark, in some cultural elements, and just like kind of how we've grown and how we've brought people on and stuff. Like the pace of our growth has allowed us to kind of develop our culture and some of our systems sort of organically over time. And now we're at a stage where we're large enough and we generate enough cash flow that it's not really that interesting to us, the idea of doing bringing in external investors or having a committed capital or any of that sort of stuff, because we were, I think, a little slower in our growth for the first couple of years, slower in growth, and also, candidly, very low in our personal compensation for those couple of years because everything's going back into the business. Like at this point, we've kind of got it that was more appealing during that stage, whereas now we've gotten to a stage where it's just not really something we even talk about, and we do get emails from people asking, we say like we're not interested. So that's kind of where we are now. But the first 3 or 4 years were definitely it's a little bit of a slog.
Got it. Okay, that makes sense. And what sorts of investors were you speaking with when you were trying to raise? Because I've spoken to a variety of people in holding companies, and I've heard the same issue, that a lot of people don't really get it. They're not that interested. But some people do raise, like Banyan did raise, and there's others that did. So who were you talking to that wasn't as open?
So what's interesting is the people that I think we were talking with back in the day. So like couple family offices, it was basically like family offices, high net worth individuals. And basically that would be like how I'd characterize them, which I think is pretty much now like where the pool that's interested in investing in this type of thing is coming from. And I actually think that the people that we were talking with back then probably would be investors, not like in you know what I mean? Like they would be an investor in this structure and asset class now, but they weren't 5 years ago. So I think that it is high net worth / family offices who have a long-term horizon and who understand, either because they owned a business themselves at some point or because they already own a couple businesses, the value of this sort of thing, and the value of compounding. But we certainly spoke with some people who were just all about yield, like they just wanted like their dividend, and we were like, we don't foresee paying out any dividends, like for for like, we're going to talk decades,
Mhm.
and for some family type offices that are really structured towards like maximizing current income to support family members, like this structure is like basically like you're asking like give me some money and then like it will be worth a lot more in 20 years. And so that is just a unique person, usually somebody who has some experience in doing that before and seeing how it, and having it turn out well.
Got it. And when you first raised from friends and family, how much did you raise upfront to start?
It was about $1 million.
Okay.
Trying to think back in the day, it was about that. It was because there was a mix of our own savings and friends and family capital, and we just paid them like a preferred note, like a preferred yield on that capital.
Okay, got it. Makes sense.
Yeah.
Cool, thank you. I'll have more questions later, but I'll let other people ask something.
Sounds good.
So Trish, I had a follow-up question just about your first business. So I think a lot of us are in that stage where we're trying to start off. So I think, and it was interesting you said that you left your full-time job in June or something, and then you started your first acquisition in September. So clearly you were doing things before that helped you do that transition so quickly. Do you have any lessons learned from that time? I know it's been so long ago, but that was super helpful for us since we are just starting on that journey.
Yeah, so I distinctly remember in September of 2014, the three of us were like, this is what we're doing. Like, we want to do this.
Yeah.
But like, we weren't even really like up to speed on like the search fund world at that time. So even this like sort of self-funded searching, like it wasn't even like really something that was on our radar at all. And so we kind of like, after we decided this is what we want to do, we kind of like looped in with the search fund community and resources, which have been wonderful. And so basically what happened is we did basically 100% of brokered search. We didn't do any proprietary outreach. And like, basically we like the things we started a website, which had no information on it, basically. And we got an email address so that we seemed like a legitimate thing, not like a Gmail account. Yeah. And we started just like reaching out to random businesses on like all those sites. And then what ended up happening is, and then we'd set up phone calls, and between the three of us, even if somebody was at work, like usually one person could take like an intro call with a broker or an owner, like after work, or step into a conference room, kind of like we're kind of like doing it like in secret. And then what actually worked out quite well is like most business owners like want to meet on the weekends because that's when their facilities are closed. So we had a lot of sort of like hectic sort of trips, like fly out on Friday night, meet them on Saturday, come home on Sunday. And it was like, honestly, like I felt uncomfortable as that picked up more, because my coworkers would be like, how was your weekend? And I would be like, it was fine. But like in reality, like I'd raced from work, to the airport to fly somewhere to spend like the whole day in like, I don't know, Kentucky, and then like flown home. But I couldn't tell them about any of that. So it was like, certainly felt like it was like at a certain point, it felt like I was lying. And when I got to that point, I was like, this feels uncomfortable. I actually like these people, respect them. And that's when I was like, this is what I'm doing, and I'm going to leave. And James and Palmer each had their own version of that. I ended up being the last person to quit. So we decided that we would like, just so that we had income, we would like, I forget exactly how it worked, but I think Palmer quit first, and then James quit, and then I quit. So they're like starting probably like, yes, I quit in June, but I think Palmer quit in the fall, like a month or two after we decided to do this. So he was really spending like all of his time doing it. And then James layered on, and then I layered on once it seemed real. And basically like my income from working like supported our search and all that sort of stuff. And then the one thing that I think we did that was very valuable from almost the very beginning, I think starting in 2014, we were like, we have zero operational experience. We don't even have a relevant finance background. We don't really have any money. So other than our website and our email address, we started putting together a weekly newsletter. And that was to basically try to seem like we were a like real company and to give us a tool of keeping in touch with brokers or with owners we'd met, and have a library on the website. So if people wanted to go back and like reference, like, you know, if you want to hear how we think about things, like go check out our articles. And so in the early days, it honestly felt like a huge time commitment, and it was a big time commitment. But it's been something that we've done almost every week now since we've started, is send out a weekly newsletter, which it's called Weekly Thoughts. You should sign up for it. And it has been a really, really good tool, because it's sort of a, if you meet with an owner, you can say, hey, I really enjoyed meeting you. I hope you don't mind. I signed you up for our weekly newsletter. Feedback is always welcome. And so then you have a, you know, you have a little bit of a connection with that person. And then maybe you can forward one and be like, oh, like I thought you might find this one in particular very interesting, because this one's about whatever, managing employees. And you said that was hard, whatever, I don't know, you know, this one, or, we know now that, you know, you might not hear from somebody for a long time, and all of a sudden they'll respond back and be like, hey, I really enjoyed this article, you know. And we've had sellers who have told us, like, you know, we went to your web, I went to your website before meeting with you, and I read through, and I really enjoyed reading these things. And, you know, it's it's a way to connect with people that isn't, you know, you're not selling something. It's something that we found that other people end up forwarding to a lot of their network or whatever. So I think that was something that we did and committed a lot of resources to early on, but it helped to distinguish us a little bit, and make us seem like we were, I don't know, I don't know if like thoughtful is the right word, but it made us seem like we had maybe some more expertise and knowledge than we actually had. So anyways, that I think was something we spent a lot of time on early days. Now we still do it, but since we've been doing it for so long, it's actually pretty easy to do. It only takes like an hour now. Before it used to take like all day to write it. So.
Got it. That is super interesting to know. I'm definitely going to sign up for that newsletter after our call.
Cool.
Just to follow up on that, so I know initially you said you did a lot of like brokered searches.
Yep.
So right now, is it still brokered, or like do you have any insights on like deal sourcing that you found to be insightful based on your experiences for the past 6 years?
Yeah, we have never done the like super mass cold, you know, 10 interns sending out things. We've never done that. It's just not our, so that works for some people, right? Like, you know, they get deals and it works. I think for us, when we started, we weren't even aware that was something that people did. So like, you know, some of that is ignorance. But then it also was, it just didn't feel like, none of us are like cold call, like we're not like salesy people at all. I think like it never felt like right or authentic to like us and our personalities, to sort of mass spam people. Like and that's not to say it's wrong. It's just like, it didn't feel like the right reflection of us. Yeah. And so we've opted for much more of like a targeted, if we are going to do outreach, it's much more targeted in terms of finding, well, like now it's, hey, we're in this industry, you know, can we talk? we're in this geography. Can we talk? This is, oh yeah, you talk about something operational. Oh, by the way, we also buy businesses. If you're ever interested in selling, let us know. So now any outreach we do is more of a like, hey, I want to connect as an operator. And by the way, if you're ever interested in selling, let us know. So it's kind of like an operator first approach to connecting with people. And usually like in a cold intro, it'll be like a, hey, like we saw that like you run this company, but we saw that like, I don't know, an example, we saw you were on a panel about employee retention at a panel. Like, I'd love to talk to you about that. Cause like, I actually do want to talk to the person about that. But then I also want to make sure they know that like Trendmark is a company that like they should be aware of if they ever want to sell. So we've opted for a much more, I'd say like curated approach, which I think is, again, authentic to who we are. And I think it is a good approach if you've got time, which you may or may not have. But I think for us, it's been more about like planting the seeds and then seeing when they come back. We've had, things that we've reached out to people and haven't heard anything. And then like a year later, they get back to you. So that's like on the cold outreach side. We still have brokers that like at this point we know. So we're not really ever now like clicking on a link at some, getting some email, click on link and go, oh, this company's interesting. But we will have brokers call us and say, hey, I know what you're doing. And I have a company that's coming to market that's in this space. Do you want to take a look? And so I think that somebody who's just starting out can also, if you take the time to educate brokers about this is who I am, this is what I'm looking for, follow up with them, get to know them. I think there's still room for that to happen with brokers. I think brokered searches don't really work well first of all, there are some brokers who are like terrible and like you should just never work with them because they're just, I don't know, they're just mean. But there are other ones who like they're trying to make the right fit, right? They're trying to match make. And so if you can be clear about these are the things I'm looking for and I'm real and all these things, you can make their job slightly easier. And if something doesn't work out, we always are candid, just little things about, hey, yeah, whatever, you sent me the SIM for this business. It's not for us for these 3 reasons, right? Like, and give them some feedback or, and by the way, it would be helpful if the SIM said this. So I think there's still room to like cultivate relationships with brokers and make sure they're thinking of you when something is about to come to market. But you have to kind of do the legwork to make that relationship happen. So that's kind of where we are now. We also like, now we get inbound because we're more like, especially if it's like the thing is like, it's a lot easier to buy a company once you own a company, which is like not something you want to hear. But, once you have a company, let's say this happened to us in landscaping, we bought our first company in landscaping and then people like local-ish, regional-ish people, they all kind of know each other vaguely. It's a community. And then they're like, oh, well, it seems like the employees at that company are happy. Like maybe I should talk to, it seems like that transition went okay. Maybe I should talk to them. And then they just end up reaching out to you. So that's what happened to us in landscaping. It wasn't even really like our plan in landscaping, but it's what happened.
Kind of like a dominoes effect, sounds like.
Yeah.
Good. Awesome. That was super helpful, Trish. I know I have a lot more questions, but I'll let others jump in and get their insights.
All right.
I'm gonna just quickly jump back because you mentioned about employees being happy, and before we got on, you and I were talking about classes we took that ended up being really helpful in life, and one of them was your change management class. And I'd love for you to talk about your experience with that transitioning piece, the good, the bad, the ugly. You've sort of hinted that honesty is one of those things that is really important. And I hear that from a lot of people. Did you have a situation where you kind of had an inkling that someone might not be honest, or did it just sort of come up on you? So that might be 5 questions in one. So
Yeah,
take it in any direction
I'll
you'd
take
like.
it. Yeah, I'll see if I can cover it. And you just, obviously we can follow up if we need to. So I think when I first bought our first business, like we had zero clue what we were doing. And so we would be like, and in our mind, we were like, nothing's going to change. Like, it's going to be like, we just want the business to keep doing what it's been doing. And like, it's, and like, we want everyone to like, just keep on trucking. And like, obviously in our financial model, like if everything just kind of like keeps on progressing, like things are good. But the reality, once you get in there, because we are who we are and we always want things to be better all the time. And, we can see like, hey, like, I'm guessing anybody on this call could walk into like a business and be like, hey, like, seems like you're using paper for that. Have you ever considered using the internet? Like those sorts of things are just going to happen. And so I think some of our first transitions were, probably not as smooth as they could have been, because we would be going in saying like, oh, like everything's going to stay the same, but we didn't even realize like how much like was going to change, because we hadn't been through the experience ourselves yet. So we don't say that anymore, because when we come in, it's like, yeah, you know what, your payroll processing might change, depending on your accounting system might change, your benefits are going to change, like in terms of like they're going to be on like our group benefit program. The way that we schedule might change, the way we do contracts, we might change pricing, like these are all things that are going to change and should change in a business, not just because we own them, but they should be changing all the time, because you're always trying to make your business better. And so I think once we realized that and also felt comfortable in saying that, because I think when we first started, we thought like, oh, well, like, we don't want to upset anybody, because we were almost like self-conscious being owners. So we're sort of like, just everything's going to be the same and like not to worry about it. And I think that for us came from a place of like lack of confidence in what we were doing, and that it was the right thing to do. And so now when we come in, we're not apologetic about it. We're just transparent and say, like, this is what we want to do. And I think that ends up being, sometimes it's kind of like the short term, long term, that ends up being, when you're transparent, kind of a better way to build trust with people. But it is, it can be nerve wracking for people. So I think usually the first, I don't know what the right time period is, 1 to 3 months of every transaction, I feel like there's a little bit of everyone's just kind of trying to figure out what's going on. And the more that we can kind of do that, the more we can kind of just like day in, day out, show up, do what we say we're going to do, all that sort of stuff, we can build as much trust as we can. So I don't know if that answered your question, but it answered a question that is out there in the universe.
Yeah, well, we have a bit of a follow-up from Celine in that direction about your first acquisition, what you would have done differently. You've talked about that early messaging, and what was critical from that transaction for the longer term success that you've had to date.
Yeah, well, the first thing, the critical success is that we just did it, and we started, because I'm a believer, I'm a strong believer there's no perfect deal. There's hair on everything, especially in the small business space. And if you're waiting for the perfect deal, it does not exist. And so the most important thing is that it just got us going. We started learning, we started moving along, and then, we built from there. So to me that, I'm not saying like go out and, buy anything at any price or whatever, but it was it was a company that had some hair on it, which I'll get into, but we bought it at a decent valuation. It had contracted revenue, so we had a stability to build off of, and it got us going. So that's the most important thing. I think when we first started, again, we didn't have any operational experience. I think we saw things that we thought would be easy to fix, that ended up taking like more time and resources than we otherwise would like to. So today we wouldn't buy that business today, if it makes sense, because we don't have to. But I'm glad that we did buy it because it got us going, if that makes sense. So I think now we'd go look at something that, this company had old equipment, paper processes, no real org chart, like all these things, and all of those things can be fixed, and they were fixed. It just ended up taking time, and today isn't something that we would do, because we can just wait for something that is, we don't want to do that anymore. I mean, we could, but we just don't want to spend our time doing that. But it was a good process for us to go through.
We're winding down to the end of the hour, so we have time for maybe one or two more questions. There's one in the chat, and then I'm going to open it up to somebody who might want to ask a question who hasn't had a chance to do so. So Diliana asks, how much time do you spend between your CEO role and your focus on the holdco level? And how big is your organization at the holdco level?
Okay, so the time question, that's interesting, and it varies a lot by the time of year and what's going on and all that sort of stuff. But I would have said like 50-50. Like if I look at a full year, it's probably slightly more holdco, because my husband is 100% focused holdco, and we're married, so that's what we end up talking about, outside of quote unquote work hours. But I'd say about 50-50. Over time, my guess is I will step away from more of the CEO role and be more holdco as we have more stuff to do there. Holdco, we don't really want a big staff here. We don't want a lot of overhead. So we have a head of marketing. We have 2 guys that help our companies with technology. We have a recruiting, like HR role, and that's it. We have an external bookkeeper that, and an external guy that helps with some financial models, like consultant type people, who are both wonderful, and I love them. And then we have, in our leadership development program, at any given time, we might have like 1 to 3 people who are working in our office who are doing like analytical work, and as they kind of get up to speed on our businesses. And that's like before they get placed in an operational role in one of our companies. So they're the ones who are helping with search and all that sort of stuff.
And kind of, so within that, like when you're funding their salaries, I guess at the holdco level, you're still using 100% the cash flow that's coming from your portfolio companies, right?
Correct.
Got it. Okay. And specifically for your leadership development program, when you're recruiting, so I guess like your HR person is doing the recruiting, is there a particular type of profile that you're looking for? Like, are you looking for MBA grads or different profiles? Like, how do you think about that?
We're pretty open. I think we've learned enough that like we've met enough small business owners to know that like not one size fits all for a successful small business owner. So we certainly do recruit from business schools, because that's just, people coming out of business schools are looking for jobs. So it's like a natural place for us to go. But by no means is it a prerequisite for people who are coming to work for us. I think we're looking for people who want to be CEOs, who want to be in the seat, who have a long-term perspective and a kind of like buy into what we're doing. Mm-hmm. So if somebody's looking to like maximize like their cash comp in like the next like 2 years or 3 years, like we are not the place for them. But if they're interested in like working with a team to become a CEO and then like be part of like our CEO group, then, and that can take a lot of different flavors, that could have a lot of different backgrounds. And so we try to cast a pretty broad net, whatever the net is, it's a large net. And then it's just more about like the cultural fit. And then also like there needs to be some analytical capabilities. So certainly not, you had to have done investment banking or consulting or some, not that, but, when you're the leader of a small business, you have to be comfortable doing quick analytical sort of work in your head based on incomplete data and making decisions. And so the ability to do that is very important. So,
Got it. Okay,
Yeah.
makes sense. Thanks.
So we'll take one last question from Whitney, and thank you, Trish, for being on the hot seat for so long.
Yeah.
Thank you. And Trish, I know you keep getting hammered on this first deal questions. And so
Yeah,
I
no problem.
apologize that I'm continuing that. But I heard you say that you guys went to Kentucky to look at a deal, but I know you're based in Portland. And so how did you guys kind of as a group determine what location you wanted to be in? And then also, what were your parameters when you were searching? And I mean, mostly in a numbers range, like what price were you looking for and type of businesses that you just absolutely didn't want?
So we were looking for, so we came up with this like very business school-y spreadsheet that like, we're basically like ranked geographies based on like climate and tax rate and all these things. And we basically, like, three of us were just like, there are some places we just don't want to live. Like, we have a pretty open mind. There are some places we just don't want to live. And there are some places where we're a little more open. And then we just kind of like focused our searches on like the places, broadly speaking, where like we thought like it would be interesting to be. So it was pretty open.
Okay.
Yeah, we looked broadly. So that was, but we had like a framework around it. And it had to also just be like, all three of us had to agree that's where we wanted to live. Not like for the long term, but at least for a couple of years.
Yeah.
And then size range. So a little, again, what we did was very, it really was like an incremental process. So we didn't really go into it being like, we're looking for a business for this price range, for this, with this EBITDA. We were really looking sort of, honestly, we were all over the place. And then once we kind of found something that we thought was interesting, that's when we ended up figuring out like, okay, well, in this deal, this is how much equity we need. And then figured out like, okay, like, how are we going to get that? So we kind of more worked backwards and just be like, hey, if it's an interesting opportunity, we sort of maybe we just have too much ego where we're like, if we find a decent deal, like we can find the money. That was like our perspective on it,
That's
which
good.
I don't know,
that's very impressive. Yeah, that's very impressive. I hear most people just like, this is what I can afford. This is what I'm going in. So that's really neat that you guys went into it like that, actually.
Kind of just kept our mind open. And then, so we looked at some smaller things, we looked at some bigger things, and we just kind of figured like, we kind of figured we'd find somebody to give us the money. So
yeah, and it all worked out in the end. So
it all worked out. Exactly. Yeah. We didn't limit ourselves though. Yeah.
Great. Thank you.
Are most of your acquisitions in that Northeast corridor?
No. So, so of the 9 businesses, we have 2 in Western Canada, which is where I'm from. We have 1 in Florida, 1 in Tennessee, and then the rest are in New England. So we're kind of all over the place. So topic for another day, I guess.
Yeah.
Yeah.
When you get as far as Hawaii, come visit, okay?
I know, that sounds great. I think everybody would be very excited about at least just a diligence trip. I think everybody would be happy about that.
Exactly. Well, thank you again, Trish, for being on the hot seat for a full hour. Really appreciate it. And I want to thank all of the audience members who asked questions for the great questions. And let's keep the conversation going on Search Funder and between each other. Feel free to reach out to each other. You're all trying to do something very, very difficult. And the more you do it together, the easier it gets. So thank you. Thank you again,
Absolutely.
Trish.
Thank you for having me. It was a fun discussion. And if anybody, it's just Trish at chenmark.com if anybody has follow-up or wants to get in touch.
Okay, and I'm going to just stay on for a few moments in case somebody has a question about Search Funder, like what is it, or where can I find something, or how do I do something on Search Funder? I'll just stay on for a few minutes, but you are now free to leave, Trish, if you want.
All right. Bye.